Well, good morning, folks. How are you? Hope you had a nice weekend. Checking Twitter. You guys can let me know if you can hear me okay. Thank you, fellas. Appreciate it. All right, so we are open for business here. Opening range gap high at 222.25. So always starting the opening range with that initial bias. We have no news today or Tuesday, and then we have CPI and PPI later in the week. So there's going to be a lot of volatility towards the end of the week. Price should be slow, but still clean on Monday and Tuesday this week. Again, as a reminder, we're always looking for that that mid gap. So we're looking around 20,179.5. I'll take you out on a 5-minute chart. Show you the pools of liquidity. Here's minor sell side. Minor buy side. Those are two pools of liquidity that I'm focusing on primarily this morning initially. Beyond that, we have this low here, and then we have this back here for primary buy side and primary sell side. I'll leave them up here for a second so you can put them on your chart. I'm going to try to do very little talking today. I believe I'm getting what my wife and kids have had, so I'm trying to preserve my voice, otherwise I won't be able to speak at all. So only when it's salient I'll mention something. So that's the initial draw. I'd like to see that stay open right here on the 15-second chart. So far, we don't have a 1 minute fair value gap yet, but I noted the 15-second one for you. Full gap closure would be all the way up here. Mid gap is here, 20,179.5. It's always the initial draw for the first 30 minutes. I'm watching this volume imbalance on the 1 minute chart on the left side. I don't want to annotate it because I don't want too much stuff on the chart this morning. You're going to hear my puppy snoring. Sorry. It is what it is. So far, a little disorganized this morning. Earlier, you heard me mention I'd rather see that stay open. The fact that we came down and hit it puts you on the sidelines till 10. Okay, we got our first presented fair value gap on 1 minute. Initial low taken here, so we'll see what we get after having done so. There's nothing for you to do, Caleb. You have to sit still. I prefer to try to climb back above first presented fair value gap on the 1 minute chart, treat it as inversion on the buy side, and get back to mid gap. Mid gap gives me better visibility for the rest of the morning session. Using inversion fair value gap here, then rallying, subsequent fair value gap after that, that would be the entry, not just trading back into it. It's too disorganized so far to use the first return back into it. Coming back after a weekend, everybody's chomping at the bit to get into a trade. And this is when you want to be slow to act. Ten and a half minutes left, opening range. Now, ideally, it should go higher from here if it wants to go to that mid gap where it's at and how it's trading is fairly probable. But it has to displace away from it. It just can't be sitting in it and trade away from it. That's not the entry, in other words. Excuse me. It's behaving like it wants to go for a deeper run on sell side. See how it touched the first presented fair value gap right here? Over here on the 1 minute chart. That's the Chicago area. I'm trying to keep it light because I don't want to have all this stuff on my chart, but I know it's going to be hard for you to track what I'm talking about. I don't have it on there in some capacity. See how demanding the initial fair value gap, trade above it, expected to see it as inversion fair value gap displays higher than a subsequent fair value gap. That's the trade. Being in here, not the trade. Minor sell side's been taken. Now, I would suspect if it was going to go for the mid gap at all before taking out the lower sell side, it would need to do it here. Otherwise, it's just going to stay heavy throughout the morning and leave that gap for right now. See these smooth lows right here on 1 minute chart. Opening range traded back to 3/4. I'm sorry, lower quarter of the opening range gap. That's mid gap, lower quadrant, and then upper quadrant, and then previous Friday settlement. No reason to be in there yet, Caleb. Another minute left, opening range. Trying to keep the audio commentary light today, in case you just signed in. I'd like to see where it's at right here. I'd like to see it try to make an attempt to get back into first presented fair value gap. That's the gap over here on the 1 minute chart. That's this one right there. That candle defined by this candle's high. That candle's low. If it doesn't run above it and treat it as inversion and displays higher and create a fair value gap there, I'm not touching it. Now, if I was inclined to be bearish today, and I'm not saying I won't be later on if something provides that information to me, but as of right now, I'm not interested in being short. But a return back into the opening price here, if it hits that and displaces lower after that, that would indicate potential weakness. I would not sell short on that, but that's how we would use the opening range gap because we've been below it. But I'm more interested in seeing it trade above this gap right there, which is this gap specifically on the 1 minute chart. I want to see it trade above it, come back down, react off of it, displace higher, and then any fair value gap that forms on the 15-second chart over here, I would use that as a run into mid gap. Otherwise, all of this here, absolutely useless to me. I'm not trading it. I wouldn't want my son trading it. You sit on your hands. Knowing why you're still is more important than where the next entry is. I want to maximize just the 15-second chart. I'd like to see that portion stay open. You know, fair value gap after running off of the first presented fair value gap. So while it did give a little bit of a run, no fair value gap formed, no trade. If then or else. And at this moment, since we've completed the first 30 minutes of trading, I like to look back and see what price has done, see how anybody may have been caught off guard, who would be positioned heavy, who would be positioned on a breakout from right now. In other words, they would be a short seller if taken out here, or they'd be going long, breaking out above here. I don't trade that way, but I like to look at it from that perspective. The buy side above here has been tagged. We're back inside the middle of the range. See how none of this hurts you, Caleb, knowing what you're looking for? You're not getting caught up in all of this range-bound delivery. I'm gonna give it till 15 minutes after 10. If nothing materializes, I'm gonna cut bait for today. It'll be just a good exercise on patience. So far, none of this in here I'm interested in any of that. I would not expect my son to be able to trade in this. Which indicates that the afternoon should be a little bit better. If this is going to be the morning session, that means lunch macro and afternoon session will be better. Better in the sense that the setups will be cleaner, easier to identify. Whereas right now, nothing really stands out. The things I would wait for and I'm instructing Caleb to be aware of, they're not materializing. So there's no trade. There's no losing trade. There's no missed opportunity. Nothing's happened so far. Quiet. I'll maximize this here. If you look at the 15-minute time frame, we're stuck in all of this price action right here. That's what's making this morning difficult. In London, if you look at what we have, this was Friday's first presented fair value gap in white. Then we had the opening of the week there. So this is new week opening gap, consequent encroachment, sells off, imbalance. There's a volume imbalance. You'll see that when we drop down to the 5-minute chart. And there's this small little gap here on the 15-minute time frame. 5 minute. That's that gap there, all through here. 15-minute inversion fair value gap. It's bearish. Why? Because this is a buy side imbalance. In the 15-minute time frame, it was. And trading back down, aiming for liquidity lower. This area here. See the entry right inside of the inversion fair value gap, and then failing to go lower. One was taken off and the other stopped. So there's covering one and then getting stopped on the final balance. So that's the only activity I had in the last 2 sessions. Back to this now. Minor buy sides taken here. Move that. Focus is here, mid gap. Inside that 5-minute volume imbalance from earlier, as I mentioned. watching this down close candle. So what would you call today's delivery so far? What condition are we in? After taking you into the 15-minute chart, are we in low resistance liquidity run conditions, or are we in high resistance liquidity run? Are you seeing fair value gaps? Spending a lot of time inside them? So we're in high resistance liquidity run, and that's why it's delivering as it is. Knowing that concept I shared with you last week, you're able to anticipate this and sit on your hands a little bit easier. You should have been able to sit on your hands a little bit easier today, let's put it that way, and not need me to say that myself or my son would be sitting still. Here's that first presented fair value gap on the 1 minute chart that we're looking at over the perspective of 15 seconds. Spending too much time in here, too much time in here. See that? The problem is you'll see moves afterwards and look back and say, oh, I wish I would have done this, I wish I would have done that. Nothing in here is high probability. Nothing. And just because you see a setup doesn't make that setup high probability. I'm teaching my son to look for low resistance liquidity run, where it's easy, it rewards his patience, and it quickly and almost near effortlessly goes to his targets. He's got to work hard for his profit. He's trading in the wrong conditions. That's basically what I'm getting at. It's easy to time the market, easy to frame low risk, easy to find low-hanging fruit objectives, partials, and then the ultimate terminus in low resistance. If you want to trade in these conditions, you certainly can, but you're going to have a lot more stop outs, a lot more frustration and anxiety while you're in the market and then in the trades. And I'm not trying to teach that to my son. I want him to go out there and feel confident. I want him to feel comfortable while he's in the trade, not worrying about a continuous, endless fear of being stopped out and taking a losing trade. There's a better way of doing it, and that's what I'm teaching you. Seven and a half more minutes, and then the stream's going to end no matter what it does. Midweek, I'm sorry, opening range gap. Midpoint is consequent encroachment up here. Any movement beyond that takes us back to new week opening gap low, which is this level here, and then consequent encroachment. Any movement back below the first presented fair value gap on the 1 minute chart, which is this area here shaded. Well, not shaded. Let me shade it now. I'm sorry. Anything below that that comes back up and treats it as an inversion, it needs to, if it's bearish, let's say it that way for the afternoon. Like say we go up here and trade mid gap or bump the new week opening gap. If we break down lower over lunch or into the afternoon, and we trade below this and come back up and hit it, and then displace lower on the 15-second chart, and it creates a fair value gap, that's something that I would, me personally, that's how I would trade the afternoon. But it would need to do the things I just said here. I'm not saying I'm bearish. I'm not saying I'm long or bullish. I'm presently still looking for this. I highlighted this inefficiency here because the way the market's delivering, it's going to be without precision because we're in high resistance liquidity run. So if it's going to lack precision, that means it's not going to come back to my first presented fair value gap. That's what I want. I annotated this one here, and you can see the body staying inside that, and then we sent it higher. Respected the volume imbalance here. We're inside of it now. I like to see it. There's a volume imbalance right in here, so it could spike down into that. See how it moves? It's give and take, but it takes a lot more than what you'd want to see in a low resistance liquidity run condition. If it makes a high, the run that makes the high, it pulls back real deep each time. That's not a fun market to be in, especially when you're trying to build large positions. It feels, well, it causes discomfort, let's put it that way. Whereas if you're trading in low resistance liquidity run conditions, the market just seems to want to go where you want it to go. And you just feel on side, there's no anxiety. It's just a quick, smooth run right to where you got to get to. And you move to the sidelines quickly and wait for the new setups. Watch the volume imbalance still in that area right there. See the relative equal highs? What's just above that? We got 3 minutes left. I'm gonna end the stream. There's your delivery. You want to screenshot that. So see how they went up into the volume imbalance, left the relative equal highs here, took your attention to the volume imbalance there. I said it could spike down into that. Volume imbalances are the least in terms of rigidness. I mentioned this to you many times. That means you got to let it trade through it and then come back above it. I said, now watch it in here again. It makes the very low of the volume imbalance. That means the body, that closing price on that candlestick. Look up here. Look at this value right here. 20,163.5. This candlestick's low 20,163 and a quarter. So one tick variance hits it and then rallies to mid gap. Your attention was taken into this imbalance because it was not likely to trade back down into our first presented fair value gap. Why? Why would it not come back down into it? Because it's already proven, as I was talking about this morning in the very little speaking that I did, the absence of precision, the fact that we spend so much time inside the inefficiencies means that we're in what? We're in high resistance liquidity runs. High resistance liquidity run conditions are not going to have elements of precision. That means the things that you really want to see deliver, they may be deferred. They may have deeper retracements in the price runs that you're part of. But more specifically, it's not going to deliver to the PD arrays as perfect as a low resistance liquidity run condition market would be. So as I was indicating, I wanted to see this gap, this shaded one here in orange. That's the first 1 minute presents the fair value gap between 9:31 and 10 o'clock in the morning Eastern time. I wanted to see it trade above it here, use its inversion, and displace higher and create a fair value gap. You don't see that here on a 15-second chart. So there's no missed trades, there's no stop out, there's no wrong logic. Same thing here. It's trading above it. Now, the difference is because I had told you that we're in high resistance, it's not likely to come back down into that. So I took you right into this inefficiency right here, and the bodies stopped that, and then the small little mohawk there. I mentioned that we would be reaching for this as the initial draw in liquidity. That's my bias. That's how I'm teaching my son to look for that bias. Even though it doesn't trade to it within the first 30 minutes by 10 o'clock, I'm filtering. I don't want to see this as a shorting opportunity. So if it goes lower, it's going to go without me. If it goes lower, it's going to go without Caleb. So keeping my focus on the mid gap, that consequent encroachment of the discount opening gap, we got lower than Friday's settlement price. Friday's settlement price is up here. So sticking to one side of the marketplace, adhering to specific rules, but identifying high resistance liquidity run conditions. That means if you're going to tape read, you got to have some understanding that you're not going to probably get the very perfect entry like a low resistance liquidity run market would deliver, where it would be trading above this gap here, coming back down, touching it, maybe going mid gap, and then displays higher, then creating a fair value gap on a 15-second chart. That would be Caleb's setup. That's how he would use it today. But because it was identified to you beforehand that it was high resistance liquidity run conditions, that return back that I was outlining as a setup wasn't likely to deliver. So I went in and I framed this one. And that's where the body stopped. We wicked below it. That's the damage. And then we rallied higher. Volume imbalance used here to run right into consequent correction of the gap. So not terribly exciting today, I understand, but we got to work with what they give us. And that's all we can do as a speculator, as a trader. And you're going to want to watch this whenever. Again, it's only an hour long, but there's a lot of things being shown here that will help you, and there's not a lot of talking in it. So hopefully you found it insightful. Lord willing, I will see you all tomorrow. Enjoy the rest of your day and be safe.